Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Continues to be a down day. It's been quite volatile actually so far, but the midcaps are outperforming. A lot to discuss on the show, so let's get started.
Absolutely right. Like you mentioned, similar to yesterday, post 10 a.m. we did see quite a bit of selling pressure and the sell-off was quite intense. But at this point of time, similar to yesterday, it seems to have abated. But quite a lot lined up on the show. Let's start off with the top headlines. Frontline indices dipped further, but some recovery noted in the mid-cap space. Realty and healthcare are the big losers. Even in oil and gas, along with metal, eke out some gains.
Tata Elxsi under pressure after reporting its Q1 FY25 numbers. Revenue beats street estimates while margin comes in lower. Healthcare vertical is under pressure, fell 4.3% on a sequential basis.
Sona BLW up over 6% in trade after Bernstein issues an outperform rating on the stock with a target price of 780 rupees. Says the company is a beneficiary of transition in mobility and should reverse underperformance this year itself.
Order wins boost HPL Electric and Ahluwalia contracts. HPL Electric bags order worth 2,100 crore rupees for supply of smart meters. The stock is up 20%. Ahluwalia contracts wins order for terminal building construction at Varanasi Airport.
Raymond sees a sharp fall today after trading X of its lifestyle business. Today was the X date for demerger of the lifestyle business.
Okay, all right, those are the top headlines. We'll discuss some of these stocks in greater detail as well. But let's take a look at the markets. The Nifty down 38 points right now. We have the banking index, which is underperforming. That one is down 0.5%. At a point in time, we saw that sharp recovery at around 12:30 p.m. And that so far has sustained at those levels. We do have the media stocks which are doing well. The CPSE index is doing really well today. Some of these oil and gas themes are surging in a weak market like this. Realty and pharma, that has come in for some profit booking today. But it's again down day, one day. Again, we see an up day. That's been the trend.
Volatility, the VIX is the one that we need to keep tracking because VIX continues to spike higher. But this is the show Midcap Radar, and this is our special segment, Midcap Mover. Hormaz is at the wall to take us to the top midcaps that are moving in the session.
Up one day, down the other, maybe, but then there are always plenty of stocks that are moving around in the broader markets and some of them continuing with the trend. Let's start off with some of the gainers on the gaining side since the broader markets are outperforming. NMDC Steel is one of them, 5.5% higher, near the highest point of the day. MRPL is having a good day today. CDSL is making a comeback after a while, 8% higher now at the highest point of the day. And RVNL continues its record-breaking run, 30-bagger now from its IPO price of 19 rupees. Today it's at 630. Now, there are some other stocks that are doing well in today's session. Most of them belong to the shipping space, and those are the ones that Shreyas Shipping in a 20% circuit, Shipping Corporation also in a 20% circuit, Cochin Shipyard is up 5%, and G Shipping also having a good day for itself. You mentioned about order wins, and those are the stocks that have also surged on the back of that. HPL Electric, another 20% circuit. That order is almost 2/3 of its market cap, so big order win there. Ahluwalia contracts also winning an order, and Kalpataru projects also won some orders earlier in the day, seeing some gains in today's session. Some stocks doing well on the back of volumes, and Sona BLW, a positive brokerage note coming in there, 6.5% higher on strong volumes. PCBL having a good day. Engineers India is having a good day at the highest point of the day now, 10.5% higher, and BSE slightly off the highs but still trading with gains of 3.5%. And lastly, some stocks that are bucking the trend in today's session. And Tube Investments saw a block deal earlier in the day, is now 5.5% lower. Brigade Macrotech, real estate is under pressure, and Aegis Logistics also not having a good day in the office today. Back to you.
Okay, all right. Thank you so much, Hormaz, for joining us. So those are some stocks which are moving around in the broader markets. Let's welcome Sameet Chaman from Angel One for a technical check on the market. Sameet, good afternoon. Thank you so much for joining us. Well, what's suggesting the market moves that we've been seeing? There was that sharp recovery we saw around 12:30. It has sustained at those levels, but do you think we'll see more recovery from there, or it could again continue to be a volatile day?
Good afternoon, Sonal. See, market has clearly slipped into a consolidation mode. Now, there are two, key observations, that are warranting some sort of caution here. But since, market, if you see last 6 odd months, market has been seeing gravity defying move. So it would be difficult to, take that call whether this data points would trigger some sort of correction or not. So one being the FIS index long short ratio, which has reached 80%, which is the highest in recent months. So at least this suggests that the upside would be limited. So what we are suggesting is, in case Nifty again comes back to its recent highs 24,500, 600, that's the time to take some money off the table. And the other key technical data point would be that prices are now deviating far away from the key moving averages. So that is the reason we are not seeing momentum in the upward direction. So some sort of profit booking is happening, but since the overall relative strength is quite high, at low levels some sort of buying trigger happens. So as of now, we are keeping a close on important level 23,900, 24,000, which is the 20-day exponential moving average on daily chart for Nifty. In case Nifty slides and stays below that, then probably we could see some decent correction toward 23,600, 500 before the budget itself. But if that doesn't happen, then Nifty is likely to vacillate within the 500, 600 point, wherein on the higher side 24,500, 24,600, these are the levels to watch out for. And on the lower side, we would see support coming around 23,900, 24,000.
Okay, Samit. Good afternoon, Samit. What are the individual stocks that you have? Any buy or sell recommendations?
See, in tandem with the market mode, we would have mixed bets. One would be on the long side and one would be on the short side. On the long side, we like ONGC. Last 7-8 odd months has been dream run for this particular counter. If you consider its overall behavior in the last decade itself, the stock is now trading at its highest levels in 2014. So that suggests this stock is now proving some sort of metal. On the daily chart, it has already confirmed its breakout last Friday. It has been continuing this move. The volume activity has risen substantially in this move, so we expect continuation of this move. With a momentum perspective, the stock is likely to move towards 320, 322. Stop can be kept around 296 for this momentum trade. On the short side, metals are showing some sort of weakness since last reported. So JSW Steel has confirmed the breakout on daily chart. So we suggest going short by keeping strict stop loss around 928 for JSW Steel and target to watch out for around 900, 896.
All right. Okay, Samit, thank you so much for joining us. Those are some technical bets, but with that, we'll slip into a short break. As we do that, a quick programming note. Will the RBI cut rates this year? Is RBI worried about a bubble in stock markets? Is India poised for GDP upgrade? Coming up later in the day, a CNBC-TV18 mega exclusive, the definitive RBI governor interview, only on India's most watched business news channel. Stay tuned for that. Welcome back. You're still tuned into Midcap Radar. Well, there's been an update that we got last evening. Resident Indians can now open foreign currency accounts at Gift City under the liberalized remittances scheme. Forex accounts can be used for all foreign current and capital account transactions as well. What is the impact on you and me? To discuss this and more, Naveen Mathur, Director of Gift City, joins us now to explain this. Mr. Mathur, good afternoon. Thank you so much for joining us. That's the first question, really. What is the impact of this move for any normal resident of the country?
Thank you very much, Sonal. Good afternoon to you and the viewers too. It's a great move, actually. It means till now, what used to happen is that you are remitting money through LRS from your Indian account to the Gift City, and therefore you were only allowed to do the transactions for the equity markets without any derivative transactions. What has actually happened with this particular notification is now within the $250,000 limit on the LRS, if you have an FC account or the FCI account, which is a foreign currency account, you can use this particular account, as you rightly said, for the current and the capital account transactions, not just in IFSC, but for the other jurisdiction, the foreign jurisdictions which are outside India. The major change is that apart from equity, now you can use this particular remittance or the account which is held in IFSC jurisdiction. The Gift City IFSC jurisdiction can be used for the wider range of purposes. Now, now you can leverage, means you can send the gifts to your friends abroad. You can buy the properties, immovable properties. You can buy insurance. Even you can do the fixed deposits with your account in the foreign currency. So you actually get benefit with respect to hedge for inflation and particularly with depreciation of the US dollar. So it's a great move, making I would say a step forward for the GIFT IFSC in comparison to the other international financial services center across the world. So it's a great move by the RBI, opening up various avenues for you to use the money held in the GIFT City foreign currency account for the purposes as I mentioned earlier. Sonal.
Mr. Naveen, you just mentioned earlier there used to be a limit on what you could actually hold in this particular account. So when you're comparing it to that, right now, is there any limit, or are you free to hold as much as you want? And number two, what are the other key differentiations between what is allowed now versus what was allowed earlier?
See, the major differentiation, I'll come to the second point first. The major differentiation is that you are not just, you can use this particular account not just for the equity purposes. It means the derivatives were not allowed earlier too. And it seems that it is not the case even with the current notification. Still need to read through in detail. But what I would say is that restriction still applies. The benefit is that you are not just limited to equity. You can use that particular money for various products within the GIFT City IFSC jurisdiction, and even for the foreign jurisdiction. Foreign jurisdiction means you can use those funds for other countries and the products and financial services for other countries too. As far as the limit is concerned, that still remains at $250,000 through LRS to be used for this particular account, because IFSC, we should all understand, the GIFT City IFSC is a foreign jurisdiction. So you need to use the LRS route to transfer the money to the foreign currency account in the IFSC. You can hold the money for 6 months only as what it is. What we understand as of now is that 6 months is the limit where you can use this particular money. Otherwise, it has to be remitted back. So this is the 6 months limitation, I think, still remains. And the purposes, as I mentioned, are all current and the capital account transactions, including the travel and the educational loan purposes, whatever you have taken for your kids to study outside even for the IFSC jurisdiction.
Got it. You actually answered my next question. I was going to ask you, is there again a time period limit? If you don't utilize those funds, do you have to, take it back? But Mr. Mathur, you spoke about how it can be used for education, it can be used for healthcare, for other purposes. The big talking point during budget was that tax collected at source for foreign remittances. Does that still apply to this? What happens to people with high transaction values in foreign accounts?
I think it doesn't speak about, the notification is just 1.5 pages of a notification. It doesn't talk about anything on the taxation. I think so. Therefore, it is implicit to understand that the taxation regime still remains the same as it was earlier. Only thing which has changed is the instruments which you can use from that particular account, the financial instruments which you can use from that particular account, which has changed drastically, I would say. And I think it's a great move for the IFSC to be seen as a comparison to the DIFC or the Singapore or the London City of London or so.
Mr. Naveen, in terms of convenience, of course, this particular move is very important. Also, do you see any kind of savings, if in terms of actual transaction cost that will transpire in case, there are people who come and, use this particular facility?
Means I think that won't change too much. Means I think that doesn't have too much of an implication on it. See, what normally happens is, as an individual, if I want to invest in certain foreign securities through LRS, the money goes from my resident account in India. The LRS purposes are limited. S0001 is the purpose under which you remit money to any transaction which is allowed through LRS. Repeating it again, the maximum permissible limit through LRS for any resident individual still remains $2.5 lakh, $250,000. So anyway, you are transacting or you are converting your Indian rupees to a foreign currency within India itself first, and then that foreign currency goes through LRS to your foreign jurisdiction account. So I think the conversion cost and all those things still remains the same. The only benefit is that if you want to hedge against inflation, or you want to use that particular money for various products apart from equity, means that's a great stuff which needs to be looked into from this particular notification. And I think that particular conversion cost and all that still remains the same. It depends upon your relationship with the banker of what spread you get while converting this particular Indian INR into the foreign currency through LRS, and use that particular foreign currency account for the various purposes. So I don't think so that has too much of an implication as far as the impact cost is concerned. But yes, what one can understand is, since now you can use this money beyond equities or other financial products, so the volume of transactions can move up. The banking sector might benefit also from having the fixed deposits now made through this particular account within the foreign currency denomination. And at the same time, even the insurance companies will benefit. So if you want to buy, say, for example, in life insurance, why not to buy a life insurance which is available in the foreign jurisdiction or the IFSC through this particular account? So I think the benefits would be multifold. How it come up during the course of time is something to be seen, but it's a great move by the RBI to ensure that IFSC stands at par with the foreign jurisdictions, which is the intention of the government to make India also as a financial global hub.
Okay, makes sense. Thank you so much, Mr. Mathur, for joining us and explaining that to us. So you add more products by this move. You'll be able to transact in those products in different aspects as well. So that's how it would impact you and I when it comes to this change which has come in for GIFT IFSC as well. Thank you so much for joining us today. By the way, before we slip into a short break, you have to look at that some of these stocks, Oil India, which is up 11% now. There's been a sudden sharp surge that we are seeing on these stocks. All these production and exploration stocks are doing really well today. Something like an HOEC that is also into oil and gas production, that one is up around 7%. ONGC also has been higher since the start of the day. So watch out for these names, big moves that we've been seeing, and that continues to be the case as well. We'll slip into a short break. When we come back, we'll get you more on the stocks and market action. Stay tuned.
Welcome back to Mid-Cap Radar. Well, one particular stock that we are focusing on today, this is part of our segment Mid-Cap Spotlight, is a stock or a company that we don't discuss too often. This particular company is called GMR Power and Urban Infra. This particular company is the demerged entity once there was a demerger that took place or a corporate action that took place between GMR Airports and this particular entity. Why are we discussing this particular stock? Well, there's been a very interesting development that the company has intimated to the exchanges. Remember earlier, the company had raised close to $275 million via the FCCB route, and this particular fundraise was done to Kuwait Investment Authority. Now, what has actually happened is that Kuwait Investment Authority, number one, has gone ahead and split this particular fundraise, or the FCCB, to two separate entities, both of whom entities are lenders who are, as per what the press release states, are eligible lenders. So both of these companies, one entity named as Synergy has FCCBs worth $154 million, and the other entity known as Gram has received $121 million as part of the FCCB. Now, yesterday, what happened is, what has transpired is that both of these lenders have decided that they would like to go ahead and convert the FCCB into equity shares. And along with that, now this is pre-decided terms and conditions for these FCCB. What happens is that they've also gone ahead and decided to waive off the interest cost. So this is positive, number one, as far as GMR Power and Infra is concerned, given the fact that they will see savings as far as the interest payment is concerned. It's also positive for the lenders, given the fact that these FCCBs were issued when the stock price was a lot lower. On the back of that, GMR Power, today is up 5%. Even in this particular year, the stock has done very well, up almost 80%, in 2024 itself, and even in the last year has given very handsome returns. So that's why, Sonal, we've been discussing this particular name, not a name we discuss too often.
Yeah, but it's good to discuss when there is some news update, right? GMR Power up around 5%. The other stock on our radar, Raymond, it is trading ex its lifestyle business today. The first leg of demerger has taken place, and that's why you could see that sharp fall in the stock price. It's not a fall, but the stock trading ex that particular business. Upasna is here with more details on this one. Upasna.
Thanks so much for that. Well, the stock is currently trading around 2,000 per share, which is down about 36% as compared to the previous day closing price. Now, what has exactly happened? The company has undergone its first leg of demerger, as today marks as the record day for the demerger of the lifestyle business. The current traded value of Raymond Limited excludes the lifestyle business, and by the end of August and early September 2024, the shares of lifestyle business are expected to be listed separately as Raymond Lifestyle Limited. The existing shareholders of Raymond would be offered 4 shares of Raymond Lifestyle for every 5 shares of Raymond Limited held. The announcement of demerger of the real estate business is expected to take 12 to 15 months to fructify, and by the end of 12 to 15 months, there will be 3 separate Raymond entities listed on the exchanges, namely Raymond Engineering Business, Raymond Lifestyle Business, and Raymond Real Estate Limited. Well, hence, that's the reason Raymond will be in focus today on the back of this corporate action.
Thanks so much for that, Upasna. It's been a sharp move, and this particular stock too has done quite well as far as the movement is concerned. But that's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner. When we return.